Let's start. That good, great. Okay. Then let's start. Welcome on YouTube. Thank you for participating. All right, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options. Welcome on Discord. Welcome on YouTube. Please hit subscribe if you like the content. Let's see, how many people do we have on YouTube? All right, not a lot, but okay. But still, I mean, people watch, so it's good. Disclosures are very important, please read them. If you're new to trading stock or options, I encourage you to visit the link on your screen to understand the risk associated with trading stock or options. And the suitability. And all right, let's jump into the market. Let's see what has happened since this morning. NVIDIA is up 7%, so nice rebound, get back to this breakdown level of 115. I would say we need to get above 120 to get bullish, but nonetheless, you know, a win is a win. Right, we have basically a few days of consolidation, not making new lows. We got above 115 level. Well, I mean, we do want a continuation, but these are good signs of at least potential bottoming process in NVIDIA. Is 104 low? Maybe not. Yes, maybe not. But you know, 100, even 90 is probably within the reach. But you have more room to the upside, right? So one can argue that okay, you have 35 risk versus reward makes sense, or you can just say, you know, as long as we're above 115 today, tomorrow, then this is the time to maybe add. Bitcoin is not participating, but it's better than QQQ. It reached 200-day moving average. We do have a very strong support at 70,000 or 75, roughly 7,500. So also oversold 3 days in a row, not making new lows. That's a good sign. VIX 24, sharp break from 30 back to 24. That is also positive for the market. So 10-year is stable around 4.3. So 10-year is stable. Dollar is stable. Strong pullback, which is bullish for the market. High yield kind of sold off on this above average volume. That could be signs of capitulation. And, you know, it's a sharp pullback. I mean, we have a few data points to digest. One is the CPI data. So CPI came in better than expected, right? Core CPI, year-over-year CPI. So that's all positive. We do have PPI tomorrow. I mean, obviously, if it's similar to CPI, where it's better than expected, right? Inflation is coming down. I think market has more room to go higher. QQQ. I mean, 3 days not making new lows. I mean, you want to get at least a little bit higher. But we're not making new lows, at least for 3 days, and that's, I would say, a win for the bulls. To get back above 480 level. So right now, we got briefly above 180, now pulling back to 478. So for now, it's still kind of a weak rebound. Spiders, 565 is a lot of, that's a major, I would say that's probably the most important chart. I would say if we get above 565, that's a win for the bulls, and if we stay there at least a couple of days. But as long as we're below 565, still bearish price pattern. Value stocks kind of finally participating in the pullback. We're close to 8% pullback, so close to 10% pullback today. So value stocks are getting money. How's 200-day moving average? Has that? Okay, I think it did drop. Let's see. Okay, so we're getting close to 2023 lows. So another. So I think we're getting close, right? 2022 lows was about 20. This is 34. Where I think this is the signs of bottoming process. Maybe this is not the bottom, but I think it's close, at least for this first wave of sell-off. And then the other one is that people like to look is 20-day moving average. So number of stocks that are low, 2023 low, 2022 low. So sentiment, right? People overly bearish. So all of these are contrarian indicators indicating that the market is oversold and need to bounce. But it has to hold that bounce, right? So QQQ is off the session highs. Spiders are off the session highs, but we'll see where we're going to close. We still have 50 minutes left. But VIX is a pretty sharp drop, so that's bullish. So I think PPI data, we're going to see how the PPI data looks tomorrow. Any questions? Okay. Let's look at some of the positions. Let's see how the stocks that I trade look. All right, so Amazon. This is the latest stock I just bought. It's stable, right? It's stable around 200 to 200-day moving average. It drifted above the July highs, which I think is an important line in the sand. Again, anything below that, it's bearish. Anything above that, I would say this is at least signs of bottoming process starting. So for now, I'm bullish on Amazon. Broadcom. It looks good, got to 200. It's above the July highs. Above 200-day moving average, doing better than most of the high beta stocks. So we'll see. I mean, it's off the session high, got to 200, now it pulled back close to the lower parts of the session, but it looks like it's trying to start this bottoming process. Citigroup, don't have a bank, I'm not sure. I want to. I mean, same thing. We're holding July lows, holding 200-day give up. But if we have another rebound, if PPI comes in better than expected, we have a rebound, then I would say maybe this makes sense to add. Not to add. I mean, this will expire worthless, but to get exposure to the banks, which I don't have right now. I mean, I do have Morgan Stanley stock and Capital One Financial. So COF looks like stabilizing up 3%. So maybe start adding to COF. Morgan Stanley looks the same, right? Maybe time to start adding. And then where's the rest of the stocks? Don't I have spiders? Did by spiders, not sure what it. Oh, I know. Let's remove this one sec. Let me get my spider's position back. Okay, and then I did. Okay, and I initiated a hedge, 550, 540. Now, I think we do have signs of bottoming process in place, which is good. But as long as we're trading below 565, it's an issue. And value stocks are still underperforming. So I think it makes sense to at least have small hedge on. I'm kind of a little late to hedge, but I put a put spread, status put spread, because it's still, I think, you could have V-shaped recovery, but again, nothing has changed in terms of concern of tariffs. This, right? That is my kind of a core scenario. Core scenario that we do have a rebound, maybe after PPI data, maybe after the Fed decision next week, but still, we need some kind of a sign of capitulation. Some kind of sign of capitulation. Any questions? Yeah, Spiders made it up in $8. Yeah, I think so too. So it's not part of right, Fred. It's not part of paid, but because of the paid, yes, system got confused because we're trying to segregate paid from other services. So it's not in paid, but it is in the regular, services. Thank you, Fred, for noticing that. Alone, Brad, Fred, Mohan, Ted. Any questions? Let's do some earnings, see if there's any earnings. No, I did Broadcom actually, right? Well, last week was the Broadcom trade. So I did sell call spread on Broadcom. Was able to collect 37 cents. Let's see, earnings. Both. You do have Adobe. Nothing interesting. Let's see. Okay. Okay, earnings. Where are the earnings? Sorry, you know, so okay, so you have Adobe after the close. And then tomorrow before morning. Nothing interesting. Okay, so Adobe. That fits into the AI theme, but Adobe earnings have been weak. So it hasn't been a great stock. You know, and last was a pretty sharp pullback. I mean, we do have a rally before, but it's kind of all over the place. I think the risk is to the downside. So 470 was the idea that it will be up, you know, 9% to the upside, 9% to the downside. And expected move, let's see. So it was down 13%, up 14%, down 13. So average move is 13%. Expected move is a lot less. You can sell calls, but probably doesn't have enough premium, right? %. So what is the position? 470. So let's say 480. 13% will take us to 486. 500. Is there any? Yeah, almost basically idea to close, you know, get back to that session open. 13% move to the upside. All right, let's see. So I mean, again, I think the risk is to the downside. So 500, wow, 440. Or revisit the lows at 400. Calendar makes sense. And go through March. So 400. It's $3. Not sure if I want to invest $300. $2. So it's expensive, right? $400 stock is expensive. Okay, let's try vertical. Vertical, $5 prime. So I'm looking at here. Okay, so I tried horizontal at 400 strike. March 14. Long put. Long put 400 strike. April expiration is to expire. So 375, right? If I sell the 440 and buy March 28th. Sell March 14th 440 put, buy $3.75. With the idea that if it has negative news, that 400 is, we're not going to break 400, but the longer one will stay. So that didn't really, that's not sure, that's too expensive on $10,000 account. If you have a bigger account, you can probably do it. Let's see, vertical spread. Bear call spread, right? So we said 13% would take us to 500. That's where the big position is. Okay, so bear call spread. Bear call spreads. 500, right? You have to come see if not enough premium. But if it, but you do have a lot of position here. So I mean, if they do have the positive, it could get to 500. That doesn't make sense. Doesn't make sense. If you have a bigger account, then maybe, right? You can do 2 calendars. So I would target one as 500 strike. So buying, let's say, March 28th, selling March 14th, and buying 500. Okay. So you can buy 500 call that expires, again, March 28th, and spend $2. Okay. So in bigger account, it makes sense because, I mean, I'm risking $400. Smaller accounts, I don't think it makes sense. Okay, so I'm buying 500 calendar spread. So in my personal, I'm not going to do it here because I don't want too much of exposure. 14 and March 28th. So March 14. Why doesn't have to be 8? Call calendar March 14. 28 is missing. Okay, so it's missing, but you can, but the idea is the same, right? So I don't even have 500, right? So sorry, 500 strike. So if you do March 14, let's say April 14, then, you know, actually more $2.72. So that may be even better trade. Now, it was the idea that the 500 call expires, but if we have a strong rally, you know, end of April, end of March, beginning of April, then it gets to 500 on good news. And then same thing could be said about long put calendar. Say 400 strike. So let's do that. So if you go into April 11, $4.30. Go to March 28, 290. So there's still 290, March 28. So here you spend basically roughly $4. So buy March 28, sell in March 14, and I would do strike 400. So this guy, 400. 10% would be around 400, maybe even lower, 395. 395 is more expensive. Oh no, it's 280. So advantage of this strategy is that basically by end of this week, we're not going to get too extreme, right? So if you sell in the 400 strike and 500 strike, right, then you basically says, as long as it's 400 and 500, then these short put and short call will expire worthless. So you collect premium on both of these options. And then the idea is that we're either going to have like a strong recovery, right? The market is going to bounce back. We're going to get, you know, continue going higher, maybe potentially close the gap if the earnings are really good, right? And, you know, and market bounces back from oversold conditions, or the opposite, right? You know, we get to 400 or 395 level, the short put and short call expires, and then you have continuation of market pullback, right? That, you know, we have a temporary halt, and then next week on Fed decision, we continue to drift lower. So that would be my thought process on Adobe. Ground spread probably makes sense the most, especially with a lot of, I mean, spread. Your thought, Keith, like at SMCI April bull spread? I mean, this is similar to, I mean, if you're bullish on Broadcom, right? I said that I'm, you know, I have a Broadcom position, right? So I mean, I'm bullish on SMCI as well. Instead of April, I think, you know, my thought process, if we do have recovery after the expiration, it will look like 2020. Sharp pullback, right? COVID started in February, sharp pullback after the expiration, right? February 18, 24, same setup. After February expiration, all the position in March expiration, VIX, right? VIX expires, you know, next Wednesday. Then you have expiration of all that gamma that goes away, and then you just need a positive catalyst. Back in 2020, it was, you know, Powell saying that we're going to use the bazooka. I think he quoted bazooka of, you know, stimulus and unlimited amount of money supplied and unlimited in buying all of the distressed asset classes in any shape or form, and then market liked that news, and you know what happened afterwards. Same thing could happen here, up to the upside or to the downside, right? Because all the positions are gone and people get caught off guard. So if you have negative news, you have sharp pullback, right? Like in 2018, right? The opposite case was 2018, right? We talked about this. You know, same thing, November expiration. You know, Powell then decided to come out and say that he's going to start hiking interest rate, and you had 10% pullback and then another 10% pullback in the next couple of weeks, and then kind of reach the bottom by end of the year. So both has to do with the expiration, because the positioning, and then the news, right? Something unexpected, right? Either Trump backs off the tariff policy, or Powell indicates that it's time to start lowering interest rates. That would be the positive case scenario. The negative case scenario, you know, in the beginning of April or end of March, Powell says, no, 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 we're going to, you know, put 50% taxes on tariffs on China and European Union, and then market just continues to drop. So I would say both scenarios are possible. You know, we'll see what happens. But, you know, I would be market neutral now, right? I would say a couple bullish, couple bearish positions, because, you know, market is oversold, it can bounce, but I don't think tariffs are going to get resolved by end of March. So, you know, you could have this, you know, wave A, rebound, and then wave B. Ted, can you repeat our post Adobe trade? Sure. So let me look at my account. I actually did 390 put. So I did 390 put. And I went with March 28th, and a debit of $2.61. So that's the trade I did. So March 14th, March 28th, bought a put spread with the idea that it will gravitate on the downside, on the negative news, it will gravitate toward 400 strike, right? That moves that one standard deviation to the left, or one standard deviation, or more than one standard, basically two standard deviations to the right. I actually like what bar charts suggest. If you're going to go with 500, You're gonna go with 500 strike. Assuming the quotes are correct. Oh, now it is there. So interesting. So I do like 500. Let's see. Did I do 500? Yeah, I did 500. I mean, $2.32. If you do March 21, you pay a little bit more for March 28, $3,005.75 more for April 4th, to give yourself more room, right? To have that short call expire. You know, collect the 97 cents, let it expire worthless, and then continue the continuation of the rally, right? That wave B. Alone, Bob is back. Bob, miss you. How are you? I'm glad you were able to make it. Alone, Bob, Brad, Fred, Mohan, Ted, Bill. Bill is back. Wow. A lot of people joining. I appreciate it. Bill, any questions? All right, a few more people joined, so I'll just repeat some of the. I mean, I'll argue bullish case. If I'm a bull, right, and I want to use self-serving bias, I would use percent of stock, 20%. $24 low, 23 low, 22 low. Usually you have a bounce. I mean, that's a good looking chart. Bulls, bears, sentiment. I talked about that. You know, negative 37, 2022 low. So sentiment matches, you know, the peak of the recession in 22, right? In terms of how people think about the current market, which is usually a good contrarian indicator. Not a good timing indicator, but good contrarian indicator. What else? I mean, sharp pullback in VIX, right? We went from 30, dropped to 24. I mean, we need another day, but tomorrow after PPI, if we drop to 22.20, that's a good sign. High yield is stable, above 200-day moving average. I mean, obviously everything is oversold. QQQ is oversold, spiders are oversold, and value stocks, they're all down 10%. All down, I mean, value is down close to 10, spiders down 10. QQQ, I think, a little bit more, close to 15, I think, last time I measured. 13 and 15. I mean, 14, 15, good enough. 15%. So that would be a bullish argument. If I'm a bear, I would say Bitcoin strong support. So maybe not, that's not. What would be my best argument? I think this monthly chart looks a little disturbing. So if you look at, pre-2022 recession, we reached 480 level, right? We broke through it in the beginning of 2024. Since the January of 24, since January of 22, we basically gave up half of the gains, right? 50% retracement, 545, 530. So the bear would argue that nothing has changed, right? There's still uncertainty about tariffs. Trump is not going to back down, or it doesn't look like he's going to back down, right? And a lot of people argue that the previous administration, corporate taxes and individual taxes, he lowered the taxes, he stimulated the economy, and then in 2018 he started the tariffs. 17 tariffs started. This because he doesn't care about re-election. He does care about midterm elections. So not conspiracy theory, but one of the theories is that he wants to, get better, balance between imports and exports, and he wants the interest rates to go down more. So he's going to pressure the market to the downside, push the tariffs, at least the first 6 months to a year of his administration, and then towards the end of this year, or second half of this year, or first half of the next year, he's going to let go of the tariffs and start pushing the, taxes agenda. So that's the bear argument, right? That he's not going to back down anytime soon. In April, the 20% for Canada and Mexico and Europe across the board, and then this reciprocal, tariffs is going to take into effect. Powell is not going to lower the interest rates because he's in wait-and-see mode. And then if we break below 545, 530, that there is no positioning, that basically opens the door to 480, right? And that's 20% pullback, similar to 2018. It doesn't take much. Okay, so that's the bear argument. You have bull argument. Who's going to win? I don't know. I'm leaning toward the bull side because I think that events of recession. So I think the economy is on a good footing, and people tend to over exaggerate, in their reaction. So you have 10% pullback, and I think we're going to hold 530, 540 level. So we could drop another 5%. I'm not saying we cannot, but I don't think we're going to get to 480. The only way we can get to 480 if there's more signs of, unemployment ticks up significantly. Retail data drops significantly. I mean, it could all happen, right? You already have some, like American Airlines, they're falling off the cliff. A couple months ago, everybody was flying and everything was wonderful, right? And then, now complete reversal of the trade, right? Everything gloom and doom. So, I mean, so it's all about, macroeconomic data. Does it support recession versus non-recession? You can see that's how the market is trading right now. People are selling treasuries and they're buying QQQ, or they're selling QQQ, buying treasuries. So that's kind of the new regime. Las Vegas, nice, Bob. Germany and Europe, yeah. So Germany is, on the new support of Ukraine, and that Europe is kind of on its own to defend against Russia. Yeah, Germany and everything that has to do with Europe is in strong uptrend, even though they were almost in recession in 2024, but they're making new highs to me. Same thing could be said about China, Taiwan. Taiwan, let's see. EWT. So you have a recovery in Taiwan shares. Should pull back now. Yeah, so Hong Kong index, I mean, you know, strong performance in 25. So is it similar to FXI? Yeah, similar to FXI. Thank you, Bob. Bill, Ted, Mohan, Fred, Brad, Bob, Alon. Any questions? All right, so let's see. 10 years pinned at 430. That hasn't changed. So, I mean, that's a bullish argument. Interest rates are down, dollar is down. That's also bullish. VIX pulled back. Spiders at 560. So couldn't break through 560. QQQ. Still, so far, pretty weak rebound. You know, we need to follow through to kind of make a definitive. And you can see like consumer staples now pulling back. And that's it. All right, guys. Thank you very much. Have a great day, and I will see you tomorrow. All right. Thank you very much, and have a great day. We'll see you tomorrow morning.